All right. Good morning, everyone. Brad Roltzkin here with the Fresno Bitcoin and Cryptocurrency Investors Group. Today we have a special guest with us, Gabriel Ramos. I met him back in February at a Bitcoin conference. We kind of chatted throughout the day, and we shared a lot of interests and aspects of cryptocurrency. But I quickly realized that he was much more into diving into the under the hood and figuring out which cryptos to invest in. And as that was something that we hadn't discussed too much in the past, I invited him on to share a little bit of how he does that. And he has a company called BlockDot, and he'll give us a little more info on that. But just want to give you a background of where he came from and why he's on this morning. So Gabriel, take it away.
Yeah. Hi, nice to meet everybody.
Basically at the back. Less than 5 furlongs.
Okay, go ahead. We'll mute people here and there if we need to.
I'll take lunch. Thank you.
Yeah, we had breakfast a little bit, so all right.
First we had breakfast, now lunch. So yeah, I'm the founder of BlockDot. It's a small, consulting firm that helps, clients who want to get exposure, not so much to cryptocurrencies in their mainstream sort of way when you think of Bitcoin and Ethereum, but some of the more fringe opportunities that are out there. The one thing you'll learn about crypto is that it is changing. It changes by the hour, oftentimes. So, what was popular and what was happening 3 hours ago ends up getting revamped, and the innovation that happens within the space is very rapid. It's very extreme, and it can become overwhelming at times. A little about me: I've been in this space since 2014. I'm one of the lucky ones who was buying Bitcoin at $100 and was buying Ethereum at $10. I am not by any stretch some, brilliant mind. I was literally in a bar with a couple of buddies, and he was telling me, hey, my girlfriend's telling me about this thing called Bitcoin. And, keep in mind, this was in 2014. So it had already been out for, 6 years, 7 years at that time. And, he's telling me the story, and I'm like, dude, like, you can use PayPal to send digital money. Like, why do we need this? And you know what I said, I'm a big, one of my things is I try to listen to anybody who is, kind of up and coming, right? Specifically within any sector of the world, right? If somebody says, hey, there's something new and interesting going on, and this could potentially be innovative, I'm always a little bit curious. So I started going back, doing some research, and I said, it's kind of interesting, right? I'll put a couple dollars into this quote unquote technology. And needless to say, it got listed on Coinbase, which was great. And then shortly after that, Coinbase listed Ethereum. And that was the one that I was like, okay, I've seen what Bitcoin can do. Cause at the time, I think it went from like 100 to like 1100. And I was like, all right, I'm going to really jump into this Ethereum because I like what it represents. I like if this is actually going to have any sort of sustained movement, right? What better way than to invest in, at that time, and even today, I look at it as almost the internet, right? You're not investing on any particular, product within the ecosystem. You're actually investing in a network that's driving a lot of the innovation that's being built on. So, that ended up, working out well. I would tell you guys that, crypto is a very emotional road. It's an emotional roller coaster. Your highs will be higher than you can ever imagine. Your lows will be lower than you can ever imagine. It is not the safest haven that you want to, be allocating funds. And just, to make sure none of this is financial advice, these are all my own personal opinions. But it definitely creates some interesting opportunities. And as we go further and further down the Main Street adoption road, I think, we're here to stay. Crypto is here to stay. Obviously, when I look at crypto in totality, I look at Bitcoin and Ethereum as the two areas where I want to have a majority of my assets in, right? So I would look at that as like a 60 to 70% threshold. And then beyond that, I would start, going off into some other areas that are a little bit more on the fringes. And this is what I'm here to talk about with Brad in regards to what I do, right? So how I'm looking at certain things. So I don't know if you guys can see my screen or not. Is my screen up, Brad?
Yeah, looks good.
Okay. Yeah. So, and again, guys, this is really meant to be kind of an open forum. You guys ask questions and we can engage and go back and forth. But when I really think about the areas that I'm focused on, there are three things that I'm always looking for, right? So one, is there a catalyst right now that's happening within, an ecosystem that's out there within cryptocurrency? So two or three of the things that I'm seeing right now is a lot of talk around play to earn and a lot of talk about Web3.
Yeah, let me see. So I'm trying to find what.
Okay, so Walter, I just muted you there. We had some background noise, but feel free to unmute or raise your hand or jump in with a question or anything. Go ahead, Gabriel.
So really, looking for a catalyst, right? So is there a catalyst? So right now, when I look at the space and I see where things are moving, I'm looking at two main catalysts that I'm interested in. And one of them is play to earn. I think that's going to have a significant impact over the next 5 to 10 years in how the gaming world is going to be, for the most part, revolutionized, right? The other one is around Web3, right? So decentralizing and democratizing the internet as we know it today. These are big, grand ideas where there's going to be a lot of dead bodies that are left, but there's going to be a couple of survivors, and there's going to be players within that space that are helping drive that innovation. So those are the things, those are one of the main things I'm looking at, right? Is there a catalyst behind this? The other catalyst, right? The other big one right now is, how do you make sure that you've got more than one network that you're relying on, right? Ethereum is the big winner in today's day and age. They own a majority of the market share. They have to ultimately get to a point where they move over from what's called a proof of work environment over to proof of stake. And the reason being is that there's so much volume and there's so much traffic on the network that the cost of running transactions is through the roof. So you have to have some other players that are in that space. And we're beginning to see other players come out of there. They came out a couple years ago, so part of that boat has already left. But these players are likely going to have a pretty significant role in the world of networks, right? And when you think about those networks, Ethereum is the big one, right? They're the main one that you're talking about. And then you've got some other players beyond that. There's factors that go into that, right? Ethereum has a vision of moving over to proof of work, proof of stake from proof of work. Once that happens, you got to ask yourself, well, what kind of impact is that going to have on these competitors that are out there? So those are some of the things that you've got to keep in mind. But those are things that I'm looking at, right? So when I'm looking at catalysts, those are really, three catalysts that I see in the industry right now. Secondarily, is smart money backing them, right? I was one of the guys who was fortunate enough to get in this in 2014. I was also one of the guys who ended up getting burned on a lot of money in 2017 and 18. Because what you realize is that in crypto, it's very easy for people to create ideas, companies, strategies, all these different things that go on. And there's a frenzy. So everybody's like, oh, I'll put some money here and I'll put some money there and I'll put money there. And the next thing you know is, 90% of those projects are going to die out. This is no different than investing early in the .com era, right? If you invested in something other than Amazon or Apple back then, and you were, investing in pets.com or whatever the hell the name of those companies where that basically flamed out and died, you're sitting in the same boat. I think in crypto, that's magnified times 1,000, right? Because it's so easy to basically raise funds and to just throw ideas out there. So you want to be very careful in regards to what projects you're chasing, right? There's a lot of guys out there and girls who create YouTube channels and they're shilling this next 1,000x coin or 100x coin that's going to go out there. Those are the things that you want to be super kind of aware of. You want to make sure that you're diversified and kind of who you're following in different areas, because at the end of the day, if you're constantly following a group of people who really believes in this one particular, for lack of a better coin, shit coin, you end up being in an echo chamber where nobody can even have a reasonable voice, right? And have you question, like, is this the right decision? Does this make sense? Is this thing going to make financial sense later on down the road? So smart money behind them, right? There's a lot of different investment companies that are out there, but I'm really looking at 3 when I'm looking at smart money. Alameda Research is huge. That's Sam Bachman-Fried. He's the guy that owns FTX. He's the guy that, if anybody watched the Super Bowl, that company put out a lot of crypto ads. Really smart money, relatively young kid, very innovative. He's one of the folks that I'm constantly watching to see, where they're putting money. 3 Arrows Capital, another one. Big players in this space, relatively young, relatively innovative. And then Coinbase Ventures. So we probably all know Coinbase by now. Coinbase Ventures is going to be another, that's the arm, their investment arm of where they'll invest dollars into some of these fringe projects. So those are the things that I'm looking at. And then the other must, the third one is, do the tokenomics work, right? Does it make sense? Is this coin needed for whatever technology is rolling out? And I think that's always a big question that you have to ask, right? One of the big arguments with crypto has always been, well, I don't understand. Why do you need the cryptocurrency in order to run this network or to utilize this project or to utilize this product or service? It's a very valid point. You need to have some sort of a reason on why this token is going to provide value, right, to the fact that you're investing, right? If you're investing in a company and it has a project, I need to understand how that token is going to, play a role within that ecosystem. So those are really the 3 musts that I'm looking at, right? The catalyst, is there smart money behind it? And do the tokenomics make sense? Is this token needed to basically run this project that they're putting out there? And if anybody has any questions, let me check the chat to see if anybody has any questions in regards to that first section.
Yeah, I don't see anything as of yet. And you guys can also raise your hand or post in the Google Doc, any of those options.
All right, so identifying catalysts. So trends in the market, right? This becomes somewhat personalized because trends in the market, have to fit some sort of narrative that you believe in. I'm not a big gamer personally, right? I have young kids that are gamers. I have a 16-year-old that's a huge gamer. I have another 14-year-old that's a gamer, and I have some younger kids that will probably get into gaming. But I personally am not a big gamer. On the other hand, I understand how large the gaming industry is. And I understand that this is likely the next industry that's going to be impacted by the innovation of these play-to-earn games. So new and emerging trends. So the 3 that I'm looking at right now, play-to-earn, Web3, and layer 1s and layer 2s to basically address the Ethereum, conundrum that we're in, right? Enhancements, right? That's another potential catalyst. So I talked a little bit about Ethereum. Ethereum is moving from a proof of work environment to a proof of stake, right? That proof of stake model is likely going to drive a lot of investor interest for multiple reasons. One, it's going to finally make Ethereum truly scalable. What kind of an impact is that going to have on something like an Avalanche or a Solana, which we're heavily invested in? It may be a dangerous, road ahead for them, because if people decide, what, I'm okay with having all my funds in Ethereum, now all of a sudden you're going to have a lot of people start taking money out of Avalanche and Solana to pile back into Ethereum, and that could have a negative, impact on the price action. So you've got to keep that in mind. On the flip side of that coin, you may have people who say, hey, I don't know if I want to have all my eggs in that Ethereum basket, even once they move to proof of stake. I think what this whole situation with Ethereum has shown us is that maybe the market is too grand and too wide to have all your eggs in one basket. So it'll be interesting to see how that plays out. But that's an example of a catalyst that's going to happen within an existing network or an existing product that's already out there. And Ethereum is the best example of that. And then the other catalyst I'm looking for is increased adoption and utilization. And I think that this is a prime example of Avalanche and Solana. Avalanche and Solana have been created as an alternative and a better option to Ethereum. Now, since being in this space since 2014, every single week, there is a guy or a group of girls or guys and girls who are creating the next Ethereum, right? This has been happening since 2014 and probably beyond. The bottom line is that there's very few that ever make it, and there's a cemetery full of dead bodies and money that's been basically wasted in all of those projects that quote unquote were going to replace Ethereum. So at the end of the day, this is where you have to be extremely careful in the ones that you're picking, because everybody has an idea. Everybody has a vision. The only ones that truly have ever kind of come out of there, right, and who have resulted in a positive price point, right? Because we're talking about investing here, right? You're not talking about going out there and investing money in the actual network of like a Cardano or an Avalanche. You're talking about investing in the token that's ultimately powering these networks. And the three that have been, the gold standard have been Avalanche, Solana, and Luna. If you look at, sort of where they were a year ago to where they are today, it's life-changing money, right? I mean, you're talking about life-changing money where some of these have been. So the question is, you take those three and then you look at the other 10 that you could have potentially put money into. Well, what happened with those? A lot of those are not doing very well right now. So you've got to really identify where it's at. And that's where utilization and adoption comes into play, right? So I think if you're able to pick a catalyst, follow smart money, and the tokenomics makes sense, and then you're able to identify something like increased adoption and utilization, you've put enough pieces in place, you've checked enough boxes to say, hey, this might be worth, putting a couple dollars into, right? So that's how I look at it. Every single time that I'm looking at this, I'm looking at the 3 must, and I'm looking at identifying a catalyst. So right now, the most exciting thing I'm in right now is all this play to earn and this Web3 technology. I think I'm very, very early. I think there's going to be a lot of dead bodies that come out of that, which probably, I'm going to be affected. But at the end of the day, I'm not trying to pick, one winner. I'm trying to pick maybe 5 or 10 players within the space, and I'm hoping one of them makes it. And if you really think about it, that's kind of the Silicon Valley model, right? When you think about these quote unquote angel investors and what they do, they never take, if they've got $1 million to invest, they never take $1 million and put it all on one, right? They might take $10,000 and put it across 100. And you only need that one to end up panning out. So, just be smart in how you're making those decisions, right? Because even though these catalysts may be in place, and even though those 3 musts are hit, you got to understand that somebody like Alameda Research is probably going out putting $1 million in 100 different companies. So if you read a publication and it's like, oh, Alameda Research just invested $5 million of seed money into this particular company, you should not be thinking to yourself, oh my God, I'm going to take all my money that I have and put it all into this company, because that's probably 0.001% of their total asset allocation. So whatever money you're playing with, just understand that you need to have it divided out accordingly. And even if you have these 3 musts and these catalysts, understand that there's going to be a lot of dead bodies that are out there. Hopefully that makes sense. Any questions, Brad?
Yeah, we actually just got one. Alexander posted in the chat. I'll just read it here real quick. What makes all these coins different from Bitcoin? You stated Ethereum owns most of the market. What market? Kind of maybe define that market. And then what has been the number 1 crypto and maintain that position up until now?
Okay. Yeah. So on Bitcoin, and that's a great question, right? So, and I just want to make sure that if anybody has, like, if somebody says like, dude, I don't know what the hell you're talking about, like, put out a question like that, right? Because I'm totally, this is what my this is what we do, right? Okay. So let's think, let's think about a very simplistic way to explain Bitcoin versus Ethereum, and then all the other, if somebody has kids in the room, I apologize, because in crypto, you're going to learn very quickly that there's a term called shit coins. And that's basically 99% of the coins that are out there that are not Bitcoin and Ethereum. Okay. So the way to think about Bitcoin is that Bitcoin is, for the most part, the way that I think about it, right? And I think that Bitcoin is a store of value, meaning that you buy Bitcoin the same way that you would buy gold or a bond or some sort of a municipal, a muni bond, something relatively safe based on the fact that, it is supposed to be today's day and age of gold, right? i.e. digital gold. I don't think, in my humble opinion, I don't see a lot of people buying Bitcoin to buy and sell service off of it, right? I don't. Like, they have things like the Lightning Network. They're trying to get more utilization out of it. But Bitcoin faces kind of two main issues in today's day and age, right? And I talked to Brad about this when we were in Fresno. People like me who own Bitcoin, I don't want to use it to go and buy my Starbucks coffee. And here's the reason why. I don't care if Starbucks wants to take Bitcoin. That's great, because I may pay $5 for a coffee of $5 worth of Bitcoin, and next week that same Bitcoin might be worth $10. So me, as an investor in Bitcoin, I'm not getting rid of it. That Bitcoin is locked in a vault, and it will be given to my children someday, when I'm gone, right? So most people who own Bitcoin are doing it from an investment standpoint, right? Maybe if it gets to $1 million, I would go off and sell some of it. But I think a lot of investors invest in Bitcoin as a store of wealth, right? Like, they say, look, I want to put some of my money in here because, and you can get into the whole ideology discussion. I'm not big into the ideology, guys. So like, the government is garbage and mistrust and misprinting. And like I get that whole argument, right? That's not me. Like, I'm not into that sort of stuff. I'm into, what can the technology do? Is this a good alternative to gold? Can this truly be viewed as an asset class that's going to increase in value over time? And to me, all those are yes. Like, once you start getting into ideology, that's a different group of people to be talking to, not to me. So that's one problem with Bitcoin, right? I pay for something and then it's worth, 20% more. And now I'm pissed because I'm going, oh my God, I just wasted all my Bitcoin, right? The other problem that you have as a person selling you the product. If I'm Starbucks and I go and I take $5 in Bitcoin, right? All of a sudden, a week later, that $5 is worth $3. Now I've got to explain to my investors, well, actually we had X amount of dollars in sales, but when you take into account the 20% reduction on the price of Bitcoin, that's got to be accounted for. So I think Bitcoin is always going to face some of those challenges. So Bitcoin, I look at it as a store of wealth, right? I'm going to put money there. I'm going to treat it like a bond fund. I'm going to treat it as something very safe. And I'm going to understand that it's going to have the roller coaster, but I am optimistic enough that I believe that over time, it's going to be worth more money today than it is. More money tomorrow than it is today, right? So that's my mindset on Bitcoin. So think of Bitcoin as a store of value, okay? Now you say to yourself, well, okay, that's great, but what are all these other shit coins, right? What's Ethereum? Okay, here's the best explanation that I can give of Ethereum. I imagine a majority of us here probably use iPhones, right? Or maybe you use Android, but you use some sort of a smartphone. And I'm going to use Apple as the example because they're the 800-pound gorilla. Apple has something called the App Store, right? And if you want to download an app, whatever it may be, a game for your kids, some sort of, note-taking package, a photo app that helps you do, any sort of cool photos. That's the App Store, right? That's what Ethereum is. Ethereum is a giant app store. They are a network where they have basically said, anybody who wants to build on us, go and build your technology. So what you're basically investing in when you're investing in Ethereum is you're investing in the blockchain technology that is revolutionizing all of this stuff, right? And we are relatively early, in my humble opinion, in regards to what real world applications are being built on this. The most common thing right now that is being built and what's pushing Ethereum's price through the roof is something called NFTs, or non-fungible tokens. At a very high baseline level, I mean, even for me, who's been in this space a while, sometimes I'm like, this is just idiotic. I mean, now granted, I am one of the idiots that has spent quite a bit of money on these NFTs. Again, not because I believe in it so much, but because I understand that others believe in it, right? I think that's the one thing that everybody in this call needs to understand. If you're trying to figure out, should I be involved in cryptocurrency? Should I be putting any of my hard-earned money at work? The question should not be, do you personally believe in this and see value, as much as, is the world around us and the evolution that's happening in front of us, do they believe in it? So that's how I always look at things, right? So the NFT space, as stupid as it is, and as ridiculous as some of these things are, and as much money that is going to be basically sent to the cemetery, there are going to be a few survivors out there. And I think if you pick the right survivors, you know, you may end up owning the next Disney. But the question becomes, you know, very few of us are going to pick the next Disney. So not to go off on that tangent, but it's more about Ethereum as a whole is the network. It's the app store that was created to allow all other innovation in the blockchain to be created, right? Nobody, I shouldn't say nobody. The development and the deployment on the Bitcoin network is very small, right? Bitcoin is looked at as a store of value. What people are doing, where they're building, is they are building on Ethereum. And what's happening within the Ethereum ecosystem, right, is Ethereum is getting so clogged with so much traffic and so many builders and so many developers that it's choking the network down. And what's happening is that you're having other companies spawn from that issue, and it's leading to some pretty interesting opportunities, right? i.e. Solana and Avalanche. So does that help answer the question as to kind of Bitcoin versus Ethereum and what is Ethereum and how it's being used? Brad, I think I missed one other part of the question. Can you repeat the last portion?
Yeah, he asked what that Ethereum owns most of the market. So I think you're referring to the market that the apps and technology are being built on. Yeah,
they own most of it. They own most of it today.
Now, what do you think are the next 2 or 3, you know, competitors or up and comers to, you know, Ethereum, you know, its biggest competitors at this point?
Yeah. So for me personally, when I look at this, I see Avalanche as a main competitor. That's AVAX, and then Solana, which is SOL, Sol. Those are the 2 really big players that I see coming out of this space. There's, like I said, there's a lot of other ones. But I think those are the ones. And why would I say those 2? I say those 2 for a couple of reasons. One, we're seeing a lot of development happening within those 2, right? Solana has basically kind of become its own ecosystem, right? Like, you have the Solana network itself, but then you've also got all of these other industries that are building upon it. So for example, with Ethereum, the big thing right now is NFTs, right? And they have what's called OpenSea, which is the big player in the NFT space where you can buy and sell NFTs. Solana has been successful in deploying a very similar deployment via NFTs using a system called Magic Eden. So again, you may not necessarily believe in NFTs and you might think they're idiotic and that this is a waste of money and everybody's going to get burned. the way that I look at any of these technologies is I look at where is the industry growing? Where's the catalyst, right? And do you actually have adoption taking place? Meaning that people are building on there, and once they're built, somebody's using it. And Solana is proven to be that. Now, Solana, just so everybody knows, right? Solana about a year and a half ago was trading at $3, and it got up to almost $300. And I think now it's like at 100. Last time I checked out my portfolio, it was like at 120 or something like that. But these things have run a long way in a very short period of time. So just understand that that's a very real thing that you have to account for. There's a lot of people that have made a lot of money, and if they start deciding, I think I'm going to take a little bit off, and then I'm going to take a little bit off, and that starts to propagate, you may be looking at Solana cut in half. So that's what I'm saying. I mean, you've got to be kind of aware of these things. And that's why, for me, once we start seeing massive gains like that, I'll start looking at, okay, maybe I need to start taking some off and putting it into some of these other emergent trends that I'm seeing out there.
And where would you put BNB compared to those two? Obviously, it has the smart chain network, but obviously they've got a lot of their use comes from their exchanges and that kind of thing.
Yeah. So I think BNB is a very, very good player in the space. I just, for whatever reason, I just have not been as involved in BNB. It's not, clearly they have the largest with Binance. That's the largest exchange in the world. There's a lot of development. There's a lot of investment that goes in there. When we did our research, it made more sense to look at Solana and Avalanche as a potential option for us. But BNB has been phenomenal, right? I think 2 years ago, if you look at BNB, I think it was trading like at $25, and now it's 300 and something odd dollars, and I think it was as high as $400 at one point in time. So, it's a very viable option. It's just, from blocked out standpoint, we like Solana and Avalanche, a little bit more.
Okay. And then Philip asked, what are some of the biggest players in the play to earn space currently?
Yeah. So that's a great question, right? So here's this, and this comes from experience, right? Be careful trying to pick a horse. Okay. What I mean by that is, if you pick one horse, man, you better make sure that you have very, very little put in that horse, or you better make sure that you've got a bunch of horses that you're betting on. One of the areas that Blockdot has been more open to kind of investing in is with what are called guilds. So guilds play the role of, let me take a step back and explain kind of what's driving a lot of this revolution within the play to earn space and within the gaming world. All right. So in today's day and age, if you want to play a video game, right, you buy a video game, you pay for all these skins, you pay to level up, you do these tasks, you do all this stuff, right? And a company like Blizzard or Activision or EA Sports, they make all that money, right? You pay them for the right to basically play, and they get this massive loyalty base created. But if they decide one day that, hey, we don't like what you're doing, we can ban you from this game, or we could change, something within the game that, that gave you an advantage, right, to basically take your advantage away. So basically, in today's day and age, the gaming industry is all about, you pay me money, and then you pay me more money to buy skins and to buy weapons and to compete in all these different tasks. And you know what? Thanks for your money. And we're going to, report to Wall Street that we've just made $10 billion on this new game that we released, right? So what's happening within the gaming world is people are saying, wait a second, this is ridiculous. Like, I pay you all this money, I do all your tasks, and then you can ban me or, you could kick me out of this game, or you could make a change to the game just like that. And all of a sudden, all my money's wasted, right? So what's happening in the play to earn world is that you have a couple of games that are beginning to come out. The biggest one is called Axie Infinity. So Axie Infinity is this game that was created where you go to different lands and different worlds, and depending on what, sort of character you have, you're in a better position to win certain battles and to accomplish certain tasks. But as that game has grown, right, the assets within that game have become very, very valuable. You got to keep in mind, I'm not a gamer, right? So like, I can bring my 16-year-old down here to explain roadblocks to me and all this stuff. But the idea is that there's a lot of money that's being spent within these games to give you a competitive edge to, quote unquote, win these battles or whatever it is that you're trying to accomplish. And when you win these battles, you get compensation in some token, right? So like in Axie Infinity, you would get what's called an SLP token, Smooth Love Potion. And then people would take this SLP token and they would compound it and stake it, or they would sell it for money. And what's crazy, and again, this is where I mentioned, don't think about you, right? Think about outside of this world. In certain third world countries, specifically the Philippines, there are thousands of players which play this Axie Infinity game, and they are able to provide a living for their family by winning these certain tasks and these certain battles, right? So they're generating income from playing these video games for the most part. So they've kind of become this model of, we can actually do this. We can build a game that's community driven, and we will incentivize people to play our game by paying them tokens, right? So this is spawning this whole play to earn world. And the games are not very good right now, right? They're not, think about, like Nintendo 64 or Atari, right? Like that's the sort of level that these games are on right now. But you're beginning to see a lot of people in the development side of the house choose to build out games in that sort of world, because that's where the money is going. That's where the incentives are going. So within these play to earn games, one of the most interesting things that's coming out of this are called guilds, right? And what a guild is, it's basically, think about it almost like a hedge fund, right? It's this company that has all of this money, and they go and they buy these very valuable assets from these different companies, right? So maybe they go and they buy a bunch of Axie Infinity assets, right? And what they do is they're able to rent that asset out to players that are playing these games every single day, trying to earn a living. And if you like rent your very desirable, very powerful, whatever, to go win a battle, and you get paid, X amount of tokens for winning that battle, they basically share in the earnings, right? So these companies are going out and they're acquiring these very high worth assets, leasing them out to players. Those players are going out, they're winning battles, they're making a living, right? They're accomplishing tasks, they're getting paid the tokens back, and they're having to split those tokens with the actual guilds. So that's what and I will say those are probably some of our biggest investments right now. There's 3 really big players in this space that we see. One of them is called Merit Circle, or MC is a token. The other one is called Rainmaker Games, which is RMG is a token. And the other one is called Avocado Guild. Those are the 3 that we like. The one that's been out the longest is a token called YGG, or Yield Guild Games. Those are the 4 really, really big players. Now, YGG is a little bit more seasoned. They're a little bit, they're a little bit longer in the tooth. I wanted to get into things that were a little bit more on the emergent front. So that's why we ended up choosing Merit Circle and Rainmaker Games. So those are what we're seeing. In regards to picking a specific game, again, I'm not a fan of betting on horses. I'd rather bet on the racetrack. I don't want to bet on the horse. So that's the reason why I have made a decision to go into the guilds as opposed to the games, because if I'm betting on a guild, I'm betting on the racetrack, right? So if play to earn works out, great. I mean, just think about how hard it is for companies like Activision to come out with a hit, right? Like my kid plays Call of Duty and he's been playing Call of Duty for 10 years. And I know just in talking to him, some Call of Duties are great and other ones really suck. And if you build one that's not very popular, you know, just think about it from that perspective, right? Think about how hard it is for companies like Activision to consistently create a hit. So that's why for me, I don't want to be in the business of picking horses. I want to be in the business of buying the racetrack.
Okay, good. A few more questions here. Let's see. And Alexander also asks, why does everything sound like it has many weak points compared to Bitcoin? Why does everything else sound like a casino compared to Bitcoin? I think we kind of covered the Bitcoin versus the other things, unless there's anything else you wanted to add on that, Gabriel?
No, I would just ask a simple question, like explain to me the top 3 applications that are built on Bitcoin and how much volume is being put on there.
Yeah.
Can you
Alexander, yeah, go ahead, Alexander. Yeah, go ahead.
All right. Hey, how you doing?
Good, how are you?
So yeah, my name's Alexander. Hope everybody's doing good this morning. What you mentioned as far as like Ethereum and all that kind of stuff, I don't know, maybe because I came into Bitcoin from a different angle, I kind of see everything else as just having weak points. I've been around as far as like, I don't know if you guys can remember, do any of you guys remember like eGold? No.
Yeah, some of us probably read about it. I know. Yeah.
The issue with all these other altcoins, as far as I'm concerned, is they all have weak points, meaning they all have a CEO, they all have a team. When you look at things like that, Bitcoin is the only one that has users only. There's nobody that can, sway, like Vitalik Buterin, for example. What's going to stop him if he wants to increase supply? Or say, you know what? ETH 2.0, I'm going to wait another year on it. That to me is a weak point. The reason why I only pick Bitcoin is because it's the real FU money. Nobody can touch it. You want to change something about it, nobody can do it. Therefore, to me, it shows infinite scarcity as far as we're concerned, because there's 10,000 coins right now in the crypto market. To me, I'm going to pick, like you said, you can either pick the number 1 horse or the top 5 and hope to win. To me, I'm going to pick the number 1 horse that's consistently won over time. And there's no other coin that can match it. Bitcoin is the only one. It's the largest network. It's the one that's most global. It's the one that you cannot change. It's the one that's consistently has the most projects building on top of it. It's the one that has the most amount of money flowing into it. It's number 1 in every category. The only thing that's not, I guess you can say it's number 1, is all these new Swiss Army knife coins. But to me, it's like I said, it just sounds like a casino. You're hoping to buy this coin. You're hoping to sell it. If your goal is to make quick cash, then by all means. But if you're consistently looking for gains, as far as I'm concerned, there's no other option.
Okay. Yeah, I think, and we're not here to debate or there's clearly not going to, Bitcoin is, I think we can all agree, is going to be a winner down the road. But I think what we're really talking about here with the technology is Bitcoin is like gold, gold's not going anywhere, but there's a lot of other coins, and tokens out there that are performing other functions. It doesn't mean that they're going to replace gold, but hey, it's just like, 20 years ago, 30 years ago, we didn't have cell phones, we could still talk in person and that was golden, but all of a sudden now we want to do other things. Like he's talking about the guilds and being able to invest in the games and this kind of thing. So it's not like these other coins are replacing Bitcoin. There's other functions that maybe Bitcoin can't do that these other coins and tokens are able to do. And which one of those 10,000, like you mentioned, or I think it's even up to 15, getting close to 20,000.
Yeah.
But like Gabriel said, 99% are going to be shit coins type of thing. Cause we just don't need that many because we go crazy, but
Yeah.
we're early in the game, and we'll see which ones play out. So good. Any other comments on that, Gabriel?
No. I mean, look, guys, I started in this venture, like I said, in 2014, buying Bitcoin at $100. A majority of my assets are in Bitcoin, but like I said earlier in the call, I am not an ideology guy. I could care less about the ideology. I get the ideology argument. I mean, it's, if you're a believer and you're really passionate and, the idea is everything else is a shitcoin, don't jump into it. Seriously. I mean, you can never go wrong. You can never have a safer bet, in my humble opinion, than Bitcoin. But yeah, I'm not an ideology guy. Like I could care less about that, because here's the bottom line, right? I am a blockchain advocate. I am a believer in blockchain. I don't care about, so much Bitcoin and it being like the end all be all. What I'm looking at is innovation. I'm looking at what is going to happen within the world that's going to significantly change how things operate today, right? I think Bitcoin and Ethereum have proven that there is an entire model out there that you can build technology out, right? The problem is that nobody is going around. Here's the thing, right? The gaming industry, and I'd have to look at the numbers, the gaming industry combined is bigger than movies, TV, radio, and music, okay? Gaming alone is bigger than all of those industries combined. Gaming is primed to be revolutionized, and blockchain technology is in a great spot to potentially do that. But here's the bottom line. Nobody is building play to earn technologies on Bitcoin. They're not. So if I'm interested in that piece of the business, right? If I'm interested in that, I have to start looking outside of there. Now, if you go, look, man, I'm not into gaming, I don't want to have anything to do with that, then yeah, I mean, Bitcoin is always going to be one of the best options for the safest returns. Safest meaning that I hope everybody sticks around if and when we have an 80 or 90% drop like we did last time, right? Because again, the ideology, if you guys ever follow me on Twitter, I do a lot of shit posting on Twitter because I love seeing all this is the last time we're going to see Bitcoin below 40,000. This is the last time. Like, let me tell you, I don't know if 69,000 is the high. Okay. I don't know if 69,000 is the high, but if Bitcoin even does a remote pullback like it did over that 3-year course from 2017 down to 2020, and you have a pullback, I wouldn't be surprised to see Bitcoin at $6,500. And I would tell you right now, if that day ever comes, I will be taking a shitload of money out to put it back in Bitcoin because I don't think it's going anywhere. But I'm just saying, like, understand that you're putting money in the riskiest assets that you can possibly imagine. And yeah, I will say this about Bitcoin. If Bitcoin goes down that much, your shitcoins are probably going to zero. That is a guarantee, right? That's a guarantee. So just be aware that that's a very, very real reality. So we're talking about a very high risk, very high reward game. But, if the play to earn sector ends up, being revolutionized, is that going to have profoundly greater impact and price appreciation than Bitcoin? Yeah, it will. It'll never catch Bitcoin from a pure dollar perspective. But could I see a guild going, 20, 50, 100x? Yeah. Could I see Bitcoin going 20, 50, 100x? No, I don't. I could see Bitcoin going 10x. I could see us easily being worth, 600, 7, 8, $1 million of Bitcoin. But I can't see it going 20, 30, 40, 50x from here. So that's where, but again, right, I put very, very small amounts of money in those strategies, right? Silicon Valley, spread those chips out. Don't bet on any one horse.
Good, good. Okay, so Gabriel, you mentioned, your 3 musts and that whole process. Can you maybe kind of rewind a few years or a year and a half or whatever time frame, and kind of take us through, just to give us an idea that the time that you went through and the time it took for everything to play out? Like an example, like Avalanche.
Yeah.
When did you start looking at it? Where did you see it? Those kinds of things. Or
Yeah.
if you want to use if another coin is a better example, that's fine too. But just to kind of, because a lot of times I'm afraid that people think, oh, I read this article, I followed a couple Twitter feeds, and I saw something here, and I, put $500 in, and 2 months later it was worth 5,000. And it's just doesn't happen that quick most of the time.
Sometimes it happens, but yeah, a lot of times. So first of all, right, with following people, you should always be skeptical, right? Just in general. There's, like, if you guys don't know how people generate money in this industry, right? Like, for example, a lot of people generate money by getting a following, and then they have referral links. And then those referral links, as they trade, they end up getting money from the trades that you're making, right? So referral links end up being a really, really big thing. The other thing is, if you're following certain influencers, right, they might be investing in a coin and front running you and then pushing out that this is going to be the next whatever. And the next thing you know, it pumps, 20%, and they get rid of the bags and give them to you. And then they're off onto the next scam that they're investing in. So always be skeptical, right? And again, that just comes from even me, right? If I say something, you should be skeptical. You should be saying, like, I don't know what this crap is. Like, who is this guy, right? I mean, that should be your mindset. Personally, here's the thing. I don't really care, because I'm investing in coins that have hundreds of millions and billions of dollars, right? Like, a couple of people putting in a couple $1,000 is not going to make a difference, right? I'm talking about, players. That's why I'm saying, if you're going to follow people, you want to follow things like players that are real in the space. Alameda Research, 3 Arrows Capital, Coinbase Ventures. These are not guys like your average influencer who's putting in, $5,000, $10,000 in a coin. These are people that are putting in $100 million in a project, right? $20 million in a project. They're locking it up over the course of the next, year or two, because they got early seed rounds in. These are the kind of projects that you're looking at. I think if you're looking to put $500 in something and you're hoping that it's going to go 10x, you're setting yourself up for failure. I mean, you just are, right? If it happens for you, you're getting lucky. That's what it is. You're getting lucky. Nobody is going to be able to tell you, hey, this coin is going to work out and you're going to 10x that in 2 months. I mean, if you're looking for that, you might as well just go to Vegas or drive to Tahoe, go to the craps table and bet on the pass line, right? I mean, it is what it is. Like, if that's what you're looking for, you're inevitably going to lose everything, right? Just stop now. Just put your money in the S&P 500 and call it a day, because you will lose everything. The question for you is, can you believe in whatever catalyst is happening, right? Like Alexander, he's a big believer in Bitcoin, right? He's going to put his money there. He's very confident in that. He believes in that. And he's very, very comfortable, right? Now, if you believe in games, or you have teenage kids who play games all the time, and you go, well, I really can see the value that this, project is pushing, then you can put yourself in that boat and put some money in there. But you got to understand that you are scratching the surface right now on what these things may become, right? I talked about not betting on a horse. I'm not going to bet on any one horse. I'll bet on the track all day long, right? Ethereum is an easy investment because I'm betting on the track, man. Solana, easy investment, betting on the track. Avalanche, easy investment. BNB, tracks, right? And as long as I can go to certain sites and see development happening, then I know that that's a good track to be betting on because there's other people building, right? If they're building on there, it's probably a good sign. So in regards to how I get involved in some of this stuff, how I'm aware. So, right, following the smart money. So big players, Alameda Research, Three Arrows Capital, Coinbase Ventures, right? Those are going to be three guys that I follow. Tools to follow the smart money. There's really two reputable quote unquote publications that are out there. One of them is Cointelegraph and the other one is CoinDesk. They will oftentimes highlight and do stories on, hey, Alameda Research just invested $10 million in this particular company. And if it looks like something interesting, and if it looks like something that could potentially play into some catalyst that I'm researching, I'll start, reading the white paper. I'll ask myself, do the tokenomics make sense? Do you actually need this token for this project to work, right? If the answer is no, then I'm probably going to stay away, right? Because, trust me, listen, I got burned in 2017 and I use it as a reminder. I look at my old portfolio versus my new portfolio every single day. And in Alex's case, if I had just never touched any of my Bitcoin, I'd have a heck of a lot more, than what I would have started out with at the beginning of the year, right? So it's just a very real thing where holding a safe coin is going to get you through the rough times a lot easier. But on the other hand, that was something that I looked at a couple of years ago. When I look at it today and I look at some of the things that we kind of ventured into, it more than makes up for some of those bad decisions in 2017. But you've got to make sure that you're asking yourself, if this project didn't have this coin, would it still be able to survive? And if the answer is yes, then that creates kind of a problem, right? Because the coin ultimately has no true value. So following smart money, right? Look at the catalysts that are out there, right? What's happening today in the world? And a lot of it is research, guys. You got to keep a pulse on these things, right? Like, one of the reasons I founded Blockdot was because every single time that there is a pump, my phone and my email starts blowing up, right? Oh, and this is how I normally know the top is in, right? I have a handful of friends and family call me when Bitcoin is like 60 grand and they're like, oh my God, I want to get back in. I'm like, sell. I'm like, that's it. The top is in. There is no way that these people would be calling me right now. But what you find out is that there's a ton of people that are still not in this space, right? And here's the thing. If you're interested in the proven technologies that are out there, Bitcoin and Ethereum, right? They have become the gold standard. Go to Coinbase, start an account, buy some, leave it, don't look at it again, right? Make sure you have a ledger, make sure you have some security, posture in place, all that good jazz. If you're in the mindset of, hey, I want to look at some of these other things, that's where it begins getting very hairy, right? Because just buying some of these coins is a pain in the ass, right? Like funding the account, getting to the right exchange. I mean, in today's day and age, the exchanges have made it pretty easy to get to. But, nowadays there's opportunities to buy in at the same rate that, some of these early investors are through these platforms out there. I got to think of the one off the top of my head. But anyway, you can buy these tokens like early on. In order to do that, it's a pain, right? Like I try to tell one of my best friends, like, hey man, you need to get into this thing. He's like, I can't figure it out. And he's been in this space with me for a long time. So I've got to walk him through. But it does become one of those scenarios where you've got to try to vet out some of this stuff, right? So a catalyst, what is the catalyst? Right now, play to earn and Web3 are the two catalysts that are driving a lot of innovation. That's not to say that it's going to be happening 6 months down the road. It's not to say that it's going to die out next month. And, people are going to say, forget it, I'm done with the play to earn. Following the smart money. If you see guys that are putting in a lot of money in that, right? Follow Cointelegraph, read some articles, keep up with what these companies are doing, understand what innovation is being driven, and then, make a decision, right? If you believe that, for example, right? Like, I don't know how many of you have Facebook, or I'm very like anti-Facebook, right? Like I am not a fan of Facebook. I think it's just a terrible company. But besides that, I'm done with that. So there's the whole idea of Web3 in today's day and age is that we are going to democratize the internet, right? Web2 is, Facebook, Twitter, I don't know, all these other companies, OpenSea as an example, right? Web3 is supposed to democratize all of this. Who knows if it's going to work, right? I mean, you're going to create a platform that's going to be owned by the people, that's going to be powered through a cryptocurrency, and everybody is just supposed to join and all be friends and sing Kumbaya. Like, I don't know, right? Like maybe it happens, maybe it doesn't. It seems very lofty. It seems very out there. But again, right? certain people are believers. Certain people are saying, hey, look, I can see where this is going to go. So for me, I don't know if I want to be involved in again, any particular horse, right? But for example, take Web3. One of the things that you're seeing in the Web3 space is OpenSea is this huge company. It's a private company right now, right? They're probably going to go public like Coinbase. And their entire purpose in life is to sell NFTs, right? And they generate hundreds of millions of dollars, every quarter. I mean, probably every month at this point, and people buying and selling these NFTs, right? So my kid is like, oh, I want to get involved in NFTs. I'm like, dude, don't pick the horse. All right, pick the racetrack. But what's interesting out of this space is that now you have Web3 companies that are creating similar platforms, right, to buy and sell NFTs. And if you end up using their platform, you get incentivized by them giving you, these tokens. They're called Looks tokens, right? Because the name of the company is called Looks Rare. That's an interesting, idea to me, right? That is a very fast forward sort of innovation that you can see, right? So like we talked about the play to earn environment, right? Games. Instead of me always paying you, why don't you pay me to use your game? I'm using your game. Give me something in return for using it, right? You're now beginning to see that happen very, very early on, right? In some of these other arenas, specifically like these marketplaces that buy and sell NFTs. Instead of me always paying you and you getting all the fees, why don't you pay me? I'm going to use your platform and you're going to incentivize me for doing so. So that's an example of like a Web3. So the question is not how do I pick these, right? There's a million shit coins to choose from. It's, do you believe in whatever it is this technology is, right? And it doesn't mean that you personally have to believe in it. Do you see that there is a market out there? That's the biggest thing I would tell you. Don't look at what you personally believe in. I personally think NFTs are idiotic. I personally believe 99% of them are going to zero. But I also believe that there is a whole world out there of younger people who do not believe they're going to zero. And there is a purpose in there. So do I want to go and try to pick the shit coin that my 16-year-old is going to want 20 years from now? No. But will I place a bet on a racetrack that's offering that technology and that's offering that and that's going to incentivize me for doing so? Yeah, I will do that because I do believe that there's a purpose. And I really think, and this is for another subject, but I find the NFT space really interesting. I look at the NFT space in the same way that I look at shitcoins in 2017, okay? There's going to be mass carnage in the streets. But the few that survive, but I think NFTs will have a place in society going forward. I believe that there's going to be a few survivors. I personally have put some chips on, hoping to catch lightning in a bottle. If they work, they work. If they don't, they don't. I'm not out there investing, millions of dollars or hundreds of thousands. They're chips that I'm putting out there. But I do think they'll have a purpose. And I think that NFTs, they have a very interesting, they're going to play a very interesting role in society as we continue to evolve and go down this digital world that we are clearly all living in.
Okay. Hey, I did get a private message I want to throw out to Gabriel, as well as maybe the group, if you guys have heard as well. And they're wondering about the city coins that use the STX tokens and then convert to Bitcoin. I think Miami coin was one of the first ones there. And I've heard about it, haven't followed it too much or anything. Any comments there from Gabriel or anybody else? Feel free to jump in.
I don't even know what that is. Sorry.
Okay. Yeah. Anybody else? I don't know,
Talk
Dean. I
about
don't know.
Miami coin.
Yeah. Was that one of the first ones? Go ahead.
Yeah, that's what it was. One of the first ones. It was something that the mayor was trying to push too, from when I looked into it at the time. Like I said, for me, it just seemed too early. They still need to work out a lot of kinks as far as how things are going to play out. So I just kept my money away.
Yeah, I think the general concept was for the residents in the city to use that coin, maybe at merchants within the city, and
Something
then
for taxes too.
it would help generate some fees that were generated on the coin would go back to the community or the city type of thing. So kind of a way to, self-support our communities kind of thing. So we'll see if it works. And if, maybe that's a good idea. Maybe it isn't. Maybe there's 5 different groups or tokens that try that concept, and we'll see if any of them.
The ground is definitely fertile.
Yeah, for sure. Okay, good. Yeah, Dina asked, do you think the Ethereum switch from proof of stake or proof of work to proof of stake will affect the price or that kind of thing?
I do. I do. I think it'll affect the price in a positive sense. Right now, if you look at some of the tools that we use at Blockdot, one of them is called Glassnode. And when you start looking at Glassnode and some of the reduction in Ethereum and Bitcoin on exchanges, you can really see that people are beginning to kind of store these in their own respective wallets. There's also an article that came out by a venture capital fund talking about right now there's all of this Ethereum that's being held in these very large, very private wallets, and that the thought process is that once they can move to proof of stake and you've got the ability to get in and out, right? Because right now I've got quite a bit of Ethereum stake myself, but it's staked and you can't move it. Like once you stake it to 2.0, you cannot move it, right? So you have a lot of smart money out there that doesn't really want to do that. And rightfully so, right? You don't know what kind of event you could have transpire over the next, couple months, couple years that could crater crypto prices. And then if you've got these funds that are locking in client money and they can't unlock it and get it out to liquidate it, you're basically, kind of screwed. So from a fiduciary standpoint, you can't really do that. But you've got more and more people buying more and more Ethereum and Bitcoin, which is reducing the amount that's available at exchanges, which is pretty interesting. I think right now it's at the lowest level that it's ever been. So you're seeing that. So in regards to Ethereum 2.0 and whether or not it's going to have a price increase, yeah, I think it will. The numbers I keep hearing are anywhere from 5,000 to 5,500. And then of course you keep hearing numbers of 10,000, 20,000. The reality is this, right? Once it moves to proof of stake and once FOMO, gets into play, 5,500 is probably a fair market value. You know what? But I would not be surprised to see it go to 10, 15,000. On the other hand, I wouldn't be surprised to wake up tomorrow and see it at 50% what it is today. So be careful, and that goes for any crypto for that matter, including Bitcoin.
Volatility.
So just be aware of that. But yeah, I think it is going to have a significant impact, and I think you're going to see even more money that is put into Ethereum to basically stake it. I mean, think about if you're a hedge fund and you have $100 million that you can go and buy worth of Ethereum and get 3, 4, 5, 6, 7% back on that. And you also start talking about Ethereum being deflationary, where they're burning certain amounts of it off. At the end of the day, I think I will tell you this. I used to be 60 to 70% Bitcoin, and then 10, 15% Ethereum, and shitcoins at 5 or 10% of my fund. Right now, I'm at about a 35-45 ratio on Bitcoin to Ethereum. I think Ethereum, in my humble opinion, has some pretty significant upside. And I think the only question is really whether or not people are going to decide, I'm okay with having Ethereum be the one network that runs a majority of the blockchain, or we kind of learned our lesson last time that we put everything on Ethereum, and are we going to have systems like Avalanche and Solana and Near Protocol? Are those going to play a role in regards to having specific niches that they fit in, right? Meaning that if Ethereum is going to become like the end all be all one source, that's great. But could Avalanche end up playing a role maybe in the DeFi space? Or could Solana end up playing a major role Solana play a major role in the NFT space or in some other space? So I think it'll be interesting to see what happens with that. My general thought is that there's going to be a lot of money that feeds back into Ethereum, and Solana and Avalanche may not hold up quite as strongly as they have, but we'll see.
Are there
I don't
any
know.
new coins out there you're looking at, or tokens? Like
Yeah.
Solana in an early age, maybe we, suggestions we can look at and kind of do some of our own research.
Yeah, so here, I'll type in here. The two that I'm looking at right now are ACA and ASTR. Actually, these are the three quote unquote shit coins that I'm looking at right now. Give me 1 second. Need to go to my other account real quick.
Again, not financial advice, but if there's help us narrow down from 15,000 to a handful or two, and then we can do our own research from there.
Yeah. Wait,
and if anybody has any other suggestions or things to look at, feel free to throw it into chat or
anybody going to a
Google
Bitcoin
Doc.
conference?
STG.
Ooh. Yeah, not me that yet. The conference that Gabriel and I met at was Bitcoin Day. If you look at bitcoinday.io, they're doing kind of mini conferences around the country as an alternative to the big one in Miami in May. Are you headed out there, Alexander?
Yeah, trying to get some vacation time put in. Still waiting on approval though, so we'll see how that goes.
And what part of the country are you in?
I'm in California.
Oh, okay. So yeah. The Bitcoin Day folks are kind of jumping around the country trying to hit the kind of secondary markets that the big conferences don't normally hit. So yeah, good.
Terrible. Any tips on how to do a quick analysis of a white paper to narrow things down? Yeah. So has anybody ever seen a white space paper? I put one in this, and I'll send this whole thing to Brad, but here, let's take a look at this here. Can you see this, Brad?
It's coming up now. A PDF. Yeah.
So this is one of the better one of the better white papers I've read, but this is really kind of what they look at, right? When I'm looking at these white papers, I'm really trying to understand what role the token is going to play, and then who the people are in this project, right? One of the things that I am not a big fan of is putting money into any platform or coin if there's not a team behind it, or at least a group of smart money investors, because at the end of the day, it's already hard enough to understand some of the inherent value that these tokens provide. So if they don't have a good team and they don't have a lot of smart money, basically it could just be a copy and paste of an idea. But this is kind of what a white paper looks like. It'll probably take you a little bit of time to read through it. It usually starts off just kind of explaining what the platform is. Then you've got a table of contents. And really what you're trying to understand is the tokenomics behind some of this stuff. I don't know if there's really a shortcut to getting this. What I would really look at, I always like to look at the team, right? So who are these people, right? Max Blagov. I mean, is this guy back in 2017, right? Like these people would create these things, and then you click on a link and fucking
ICO.
sorry, pardon my French. It would go nowhere, and you're like, are you kidding me? So some of these guys, you can click on them, look at their LinkedIn, figure out what their story is. Have they been around for a while? But I don't know if there's really like a shortcut to some of this stuff, right? You've got to just take the time to where'd the paper go.
You gotta put in the work.
Yeah, exactly. And like I said, I mean, I think a lot of them are just you got to keep in mind that if anybody's ever seen a pitch deck, right? These are just pitch decks in the sense that it's an idea, right? They're just ideas. So you've got to, really ask yourself, who's backing these ideas. If you've got a lot of smart money and you've got a big amount of dollars that are going into these things, they're probably going to be able to sustain and survive longer than maybe others because they're going to have enough cash to kind of get through the runway. You start getting into some shit coins where there's no founder, there's not a lot of expertise. You can't even figure out like who in the world these people are. They seem to have little to no experience. All of a sudden you start going, well, wait a second, what are the odds of this thing, surviving? But yeah, there's not a whole lot of, I guess there's not a whole lot of cheat to it. You'd really want to look at the team, and then you'd want to go. And here's the other thing with some of these tokens, right? If you go to their site and on their white paper, it doesn't specifically address investors in their project. Go to their site, try to do some research, right? If they say, for example, that they've been funded by Alameda Research, do a quick Google check, right? Just do like Alameda Research Engine Coin and see if there's any actual real publications. Because again, crypto is the Wild West. So there's a lot of bad characters out there. And if you know how to do a little bit of software development and a little bit of coding, you can create a smart contract and an Ethereum node, copy and paste a white paper, put some bullshit people on there and list it on an exchange. I mean, in decentralized exchanges, right? If I wanted to create a shitcoin today and I wanted to create a block dot and just put a garbage, presentation together like this, a garbage white paper, and have it listed out there, and I've got enough influencers that can push that out, you could create your own token on an exchange in 5 minutes. Like it is not a very hard thing to do, especially decentralized exchanges. So understand that the barrier to entry on a lot of those things is pretty minimal, right? And not to divert, but like in the NFT space, the biggest scams that you see right now are people going to this website called Fiverr, right? This is a great site for anybody who ever needs a website created, or you want a logo created, or you want anything created. I use Fiverr all the time. You have people going on there, and for $1,000, you could have a whole 10,000 PFP collection. It's profile pic collection, and you could put that garbage up on OpenSea. And if you get enough influencers to kind of push your brand and your product, you could, people are just making millions of dollars, getting filthy rich, running scams left and right. It's a big problem within the space. So just understand that the barrier to entry in a lot of this stuff is not very difficult. It's very easy to list your shitcoin on an exchange. It's very easy to copy and paste a white paper. It's very easy to go to Fiverr and pay somebody a couple $100 to, create whatever to give yourself a real looking presence. So just, be aware that those barriers are not very lofty to get through. And because of that, you could basically be in a scenario where, where all of a sudden you've got a bunch of shitcoins.
Mm-hmm.
Okay, and Philip had posted a question about liquidity pools, and Philip, I'm going to paste a link to our recording that we did, here in the group, actually last year on liquidity pools. It's a little outside of what we're talking about today, but I want to make sure you get that question answered. So feel free to check out that and yeah, go from there, maybe post some comments, or we can talk about it in the future. And I'm always looking for other topics, guys. So if you've got ideas for topics that we haven't covered yet, or we haven't covered in a while, let me know, for future meetings. See, there was a new question here. Okay, good. Yeah. Yeah. Any other thoughts on evaluated team? Yeah, I think you covered that pretty well. Yeah, anybody else questions? We're kind of getting near to the bottom of the hour, and we can go a little bit longer or see how if we have any more questions. So go ahead and jump in.
All right. So we can go on here. So do the tokenomics make sense? So, read the white paper, right? Kind of a necessary evil. Do I need this coin? Does this project need this coin to survive? Now, it's not always does it need the coin, right? Here's why I love crypto and why you should all love crypto, right? Not to go off on a tangent about anything, but you hear about wealth gaps and all the issues that we have within society and all the issues that we have within the world. And if you really think about what cryptocurrencies as a whole represent, is they represent this idea, right? Once you can get rid of the scammers, right? It represents this idea that if you can decentralize and democratize all of these things that we use every single day, can I potentially benefit from that and be incentivized to do so? And that's the beauty of what a lot of these crypto projects represent. It's, hey, society, you've been getting shafted and you've been getting the short end of the stick for all these years, right? Facebook makes all this money from having you go on there. They steal your data. They know every deep, dark secret of yours, and they shill a bunch of bullshit out to you. And you get nothing in return other than, again, not to go off on a tangent, but fed misinformation, which creates a bigger divide amongst society. And that's it for that. Okay. But wouldn't it be nice, right, if all of this data, if all my information, could be used to incentivize me, right? Every deep, dark secret of mine. Why don't you incentivize me to, take advantage of it? Why don't you give me something in return for me sharing my most private, intimate secrets of whatever it is, right? I'm having a new kid. My mother just passed away. My best friend is, whatever, right? Like that's the idea behind some of these projects. It's incentivizing you to use the technology, right? So when you're reading these white papers and you're going, does this make sense? Don't always think about it from, does it make sense to me personally? Does it make sense to, an entire ecosystem and environment of people that may be using this, i.e. gaming, right? So just understand that as you're reading these tokens, right? It's not about, can the project run? A lot of these projects, a lot of these crypto projects, they're decentralized to some extent, right? Where they have to be run by people, by users, right? And when you're running these projects, when you're doing this stuff, you're basically incentivizing people to keep the network running, right? Like if I'm going to put money in Solana and I'm going to hold Solana, the Solana network may run, with or without the Solana token. But in order for it to work, you have to have people that buy that token, who stake that token, and who have a vested interest in making sure that that network continues to operate, right? So that's kind of the idea behind it. You don't necessarily need to say, does this technology need this token in order to survive? It may not necessarily have anything to do with the token as much as, do you need the people to power the back end of this network in order for it to survive and continue to build, right? That's the way you want to kind of think about that when you're asking yourself those questions. And that's what ties into, does the coin offer any inherent value in running the project, right? Are people going to have to use this coin in order for this project to survive and continue to grow? So that's the way to really look at these tokenomics as you're reading these white papers, is not so much, yes, the project may survive without the token, but if you don't have the token and the people are helping power the network or keeping it stable or keeping it secure, then is the project going to work? And the answer to that is probably no, right? That's the reason why they created the token, because they need people to buy in. They need people to invest in the idea. Go ahead and what other questions we have?
Yeah. I got a private question, just a little more about the Ethereum and Ethereum 2, because we're starting to see Ethereum 2 out there, and just explain what's going on. And the question is, was one of them real and one of them isn't? And so maybe kind of just help define why we're seeing Ethereum 2 in references to it.
So first of all, so just to clarify, Ethereum came out and got rid of the Ethereum 2 because it felt like it was going to cause too much confusion. So now they've renamed Ethereum 2 to the consensus layer. I don't know if it helps out. It sounds even more confusing to me. But basically, there was a thought process that it was going to create confusion, like, oh, is Ethereum 1 the original token, and is Ethereum 2 going to be a whole different token? The answer to that is no. Ethereum is going to be Ethereum. It's just that the 2.0 naming convention was creating confusion amongst the crypto, amongst the crypto space, especially for newer people that are getting involved in. So they changed it to the consensus layer. So in regards to what's going to happen, I mean, basically in today's day and age, Ethereum runs on what's called proof of work, meaning that there's all of these different miners. If anybody has ever bought anything using Ethereum, there's always what's called a gas fee, right? And that's basically a fee that you pay in order to utilize the actual Ethereum network, right? And there's these miners on the back end that are running all this hardware, and they're the ones who validate and approve the transaction on the blockchain. And depending on how busy the Ethereum network is, that's what determines the price of the gas fee that you pay, right? So that's how Ethereum works. And NFTs kind of created this complete fiasco where all the major NFT projects were being built on Ethereum, right? Because that was the biggest, sort of player in the space. And what was happening is you had this influx of users that was completely choking the network down. So the people on the back end who run the hardware and charge the gas fees, the network was getting more and more congested and kept elevating the pricing higher and higher. I mean, it was to the point where if you wanted to buy something for $100, it might cost you $150 in transaction fees, right? I mean, it was crazy. So Ethereum has always known that, or Vitalik has always known that this was going to be an issue as the network continued to grow. So the idea was always to move Ethereum from what's called proof of work, right? Which is, these miners validating their transactions, to proof of stake. Proof of stake basically means that, you take all this Ethereum and you stake it, and those staking agreements are going to basically validate these various transactions. So that's the big thing that's happening with Ethereum. Ideally, the thought is you'll be able to get the cost of gas so cheap that there will never be a barrier. There'll be no other reason to use any other blockchain, which may end up being the case. And that's the reason why you got to be a little bit concerned about some of these competitors that are out there, and some of these competitors that have really increased in value over the years. Because once Ethereum finally gets to this consensus layer, i.e. Ethereum 2.0 environment, the gas fees should level off and they should be a lot less expensive. And then that's ultimately just going to have people say, hey, I'd rather just build on Ethereum if it's not going to hamper, my ability to do certain things. Does that make sense?
Yeah, I think the main thing was just when we're seeing it out there, which one do we buy? And I think that was where
no. There's only one Ethereum. That's the problem. There's only one Ethereum. If you ever see something that says Ethereum 2.0 or some other, do not buy that. Okay. There is only one Ethereum, and it is, north of $3,000 right now. So don't ever buy anything else. It's a scam.
Yeah. The symbol ETH, and we're seeing that just these scam coin. Yeah. I don't even go there. It's just
only one Ethereum.
Yeah.
There is no other Ethereum. There's one, and it's ETH, and that is it.
Okay. Another real question here real quick. So, can you touch on Nodes as a service nodes, such as Strong, Phoenix, Store, Hive. I don't know if you've-
Garbage. I
Okay,
won't even touch that.
okay,
Strong
Easy.
node is a proven Ponzi scheme. It is a Ponzi. It is an absolute Ponzi. They get money in, and that's how they pay the other users. And there's all this garbage. I mean, like, I'm sorry. It's just like,
Yeah.
I know there's things that people want to jump into because, it's like, oh, is this going to be the next, just ask yourself a question. Okay. This is a weekly chart on Strong Node. Can you see this?
Not yet. There, now it's up. Yeah.
Can you see this? This
Yeah.
is a weekly, chart. This is a week, not a daily chart, a weekly chart. These guys went from what, $64 when they first started out, all the way to $1,200. People were still buying the top, and this thing is down. Oh. And this thing is down to $120, and this thing is probably going to zero. Okay, it's going to zero. It is a proven scam. It is well known that it's a Ponzi scheme. It's all people are doing are trying to catch lightning. So if your followers are recommending this, be careful. Next question.
Okay. Yeah. And Scott's asking about what's the best way to buy Ethereum. He says he has Webull, Coinbase, Coinbase Pro, and crypto. Maybe just touch a little on, some of these exchanges where you're not actually holding the coin. It's just a paper trade like Robinhood and PayPal. I don't know if Webull is doing that.
So Coinbase Pro is probably your best option. And the reason why is, Coinbase and Coinbase Pro are the same thing, but Coinbase is the very easy, user-friendly version to buy crypto. The problem with that is that it is designed to, help newbies buy in. So they charge really big fees. If you go to Coinbase Pro, which is the same login, the same application, it's just a lot cheaper to buy. The transaction fees are a lot lower. So use Coinbase Pro. The problem with Coinbase is that some of these shit coins we're talking about, if you ever decide, oh, I just read this article in Cointelegraph about this new coin, ASTR, and I want to buy into that. A lot of times those coins will not be listed on Coinbase. So that's when you have to start venturing into exchanges like KuCoin. I'm happy to do a walkthrough on one of those, Brad. I don't think today's the ideal scenario. Does everybody know how to?
Yeah, and we've covered that on previous meetings and that kind of thing. But I'll just add that you may buy them on Coinbase, either Coinbase or Coinbase Pro, but then you want to move them to a wallet where you control the private keys. You mentioned Ledger a little bit, or Exodus, Trust Wallet, something like that, where you're controlling the private keys, because we don't want to leave our funds on these exchanges where they're in control of that company or the exchange themselves. We want to be in control. This is, like you mentioned, it's the Wild West, so we need to be in control of our funds as much as possible.
Yep.
Hey, Brad.
Yeah. Hey, Scott.
Hey, I was just going to mention that staying on Coinbase prevents you from some of the fees, because if it's not a hodl for you, if your intent is to trade it or to hold it for short term, the transfer fees are very, very small if you want to trade in and out of a non-stable coin or non-fiat type asset. So trading ETH for something else doesn't introduce a gas fee somewhere like Coinbase or Coinbase Pro, because it's an internal ledger at Coinbase that's doing the trading between them. So there's no gas fee to go with it. There's a small transaction fee, but it's not a killer to get in and out. So if you're just playing around with small amounts, it's not bad to stay on an exchange. If you're looking to hold it and you want to control it, then yes, you want to put it on a hard wallet.
Yeah. Great point. So if you've got, $10,000 in Ethereum, but you're dabbling with $1,000 back and forth, jumping around, so then put the 9,000 in a hardware wallet or Trust or Exodus or something like that, and then keep the other 1,000 in Coinbase, and you can jump back.
Yeah, it also lets you do things like, because if you hold a little bit on the platform, and let's say you have $1,000 worth of ETH in there, and what you really want to do is you want to buy some token that you're going to use on a decentralized exchange or something like that. Well, when you go to put the money in, then you get a hold out of Coinbase. Well, they make sure they got your money. But if you have assets on the platform they'll let you buy you have $1,000 worth of ETH on there. They'll let you buy $100 or $500 worth of something and then trade it right away. So you could literally go in there, get the asset, and then move it, say to a decentralized exchange, or to something like Bitney, where you just send to them and then they send you the asset you want. So then in that way, you are not fighting the part about getting the fees off the platform or moving them around. And since they have a lot of different kinds of assets, if you wanted to get something like, like Solana, you could move it and use it somewhere in the Solana ecosystem.
Okay, good. Yeah, thanks for that. And we got another question here real quick about staking from a ledger or private wallet, which generally you're not going to be able to do that. And that, yeah, maybe we need to do a meeting on staking. But generally when you're staking, go ahead.
So having a ledger does not prevent you from staking or providing liquidity pools. A ledger, the way, if anybody has ever worked in corporate America, you guys probably have had what are called secure RSA tokens, right? Some of you might even have what's called Duo, which basically is an authentication model. It's an authentication layer. So if I log into my work laptop, I usually have like an RSA token on my phone and I plug those numbers in, and that's what allows a transaction to happen. When you put money on your ledger, the money is not really sitting, the money is sitting on your ledger, right? To some extent, but it's just more of an authentication process. So you can have certain funds in your account still tied to a ledger, and then you're just authorizing the transaction to go through. So as long as nobody ever has your ledger or has your seed phrase, you can still conduct, stake, do liquidity pools. You can do any of that stuff, but the ledger is just making sure that you're validating that transaction. So think about it like an RSA token,
Right, okay.
secure IP. That's the way to think about the ledger.
Yeah, I think I was taking her question a little differently, where, yeah, there's so many different options in staking that, yeah. Okay, we'll have to do that as a meeting. I'm going to make a note of that just to kind of cover that. We touched it. I mean, like you said, things change by the week, and we probably talked that 6 months ago, and obviously that's an eternity. So yeah, maybe any final thoughts, Gabriel? We'll kind of wrap it up here, and maybe, yeah, whatever else you want to add.
There's probably two things that I'm most excited about right now in investing in some of these shit coins, right? One of them is the ability to do staking or provide liquidity or do yield farming whenever you have a token. So for example, we talked about the fact that some of these projects, they may take years to kind of take off, right? You should really be looking at anything you put money into as a 3 to 5 year horizon. And understand that there's probably going to be a lot of volatility within that 3 to 5 years, because these things take time, right? So here's the thing. If you want to be in something that's been proven and that is likely to grow gradually over time, Bitcoin and Ethereum are your two ideal choices, right? They're proven, they're battle tested, they're probably going to be around for a very long time. Everything else that's coming out, emerging trends, that stuff takes a long time to get through. And some of it may not work out at all. So when I go into play to earn games, or I go into Web3, or I go into anything like that, I have a 3 to 5 year horizon, and I have money in there that if it goes to zero, I'm not going to be happy, but it's not going to have a significant impact on, on my financial life, right? So I have a 3 to 5 year time horizon. The question though is, within that 3 to 5 years that I'm holding these shit coins, what can I do to potentially get more of these? And one of the things that I like, especially in the Solana ecosystem, and again, this will probably change as Ethereum moves over to this staking model, is I can go and I can take some of these shit coins that I'm buying, and I can put liquidity pools in place, right? Just to give you an idea, I'm invested in 2 Solana projects right now. Well, no, we'll go to the gaming. All right, so to give you an idea, I bought into Merit Circle. I think it's lower now than what I bought in at. I think I bought into Merit Circle around $3 per shitcoin. Okay. I just can't help myself. At $3 per shitcoin is what I bought in at. And I went and I staked those shitcoins on the merit circle system. I staked them for a full year because this is a 3 to 5 year project for me. Within staking those, I've already earned more merit circle coins than what I actually bought into. And every single month, you know, I basically take a pool because the rewards, once you unstake them, they basically sit idle for a year, right? There's a 1 year kind of holding period. And that's because they don't want all these rewards being taken and then being sold off on the market and crushing the price even more. But Rainmaker Games and Merit Circle offer that. On Solana right now, I'm invested in 2 shitcoin projects, and I was able to go to what's called their Radium pool, right? It's kind of a decentralized exchange. And I was able to stake those for liquidity, where I'm earning, you know, a ton of these coins every single day, every single week. So the question for you is this: if you decide that I'm going to get into one of these shit coins, but while I have to wait 3 to 5 years, is there an opportunity for me to earn more yield by doing something like, you know, staking or liquidity pools or yield farming? Because at least while you're waiting and at least while you're in this scenario, you may be able to get 10 times the amount of coins that you originally bought. And if and when that project takes off, at least you're not just sitting there with your original stack, right? And what's nice is that if you decide to unstake them in certain things, right, like with Merit Circle and Rainmaker Games, that's a different strategy altogether because I did lock those tokens up. But on a lot of the rewards, like with liquidity pools, you can go ahead and immediately take that liquidity pool out and sell it. If you decide I'm not happy with this, I don't want it, it's garbage, it looks like it's a scam, you can at least salvage whatever you have. So that would be one of the areas that you guys may want to start looking into. Hey, if I buy this shitcoin, is there a way for me to stake it or to provide liquidity to hopefully earn more of these tokens while I'm waiting out this sort of greater adoption that's going to lead to higher price action? So yeah, that's it. I'm happy to send this document over to you, Brad, if you want to, you know, share it with the team and the folks. And then, you know, it was a pleasure meeting all of you. I hope you got some value out of it. And yeah, that's it. So thanks, Brad. It was great.
All right, great. Yeah, thank you. I think what we'll do is put down a liquidity pool topic, because looking back at that one for Philip, it was actually a year ago that we were looking at that, and that was kind of when the BNB coin was new with all of that. So probably time to look at that again. So Gabriel, thank you. Thank you, everybody that submitted questions and contributed. I'll post the recording for the meeting here in the comments on the event page, so you can look for that later, and as well as the Google Doc comments in there as well. And again, Gabriel, thanks for your time and joining us, and we look forward to hoping maybe seeing you again in the future.
Absolutely. Thanks again, guys. Hope everybody has a great weekend.
All right, thanks everyone. Take care.
Hey, Brad.
Yeah, go ahead.
Hey, I have something to add. So there's a lot of discussion through several different crypto chat rooms and groups and so forth. People are coming out with this idea of, hey, we're going to have some sort of collab event. And then they get people to input their 12 to 24 word seed phrase as a means of quote unquote synchronizing wallets with the site, so then they can do an airdrop of NFTs and whatnot into people's wallets. Under no circumstances are you to ever utilize that method to quote synchronize your wallet with a website, because then someone can walk off with your entire wallet.
Right. We've talked about that in the past, but an excellent reminder, especially for any of those that are kind of new to the decentralized space and might see that as something, but that is purely fraud, a scam. Run away, close your browser, disconnect your wallet, whatever it takes. So yeah, thanks for that reminder. And we'll
with your wallet, and then you get nailed for it.
Yeah. Okay. All right, guys, well, you have a good rest of your day, and we'll see you next time, and post any other comments on the event page. And we'll see you next month, or actually it's going to, the main meeting is actually going to be on April 30th, just from a timing standpoint. But I look forward to seeing you then. Take care.